Japan panics once again. Folks, in today's update, we turn our attention back across the Pacific to Japan, who just stepped in to intervene in the currency markets once again, defending that yen. And this comes after both the Bank of Japan and the Federal Reserve decided to leave rates unchanged, but the bond market is reacting strongly to the intervention from the Bank of Japan here today. We're going to break down what this means for markets and ultimately how does it tie back into XRP. Ripple's been expanding. We'll break that down, but very interesting that we have an activation specifically for XRP in Japan taking place right now at the same time that Japan intervenes in the currency market. Let's put it all together for you guys in this morning's update. As always, if you appreciate what we're doing here, please help us out by liking our videos, sharing them out far and wide. And if you're new here, make sure you subscribe and hit that notification bell. All of our community resources are available at zachrector.com, or we have quick links in the description down below. Thank you for supporting the cause. Let's rock and roll. There it is. Look at that big red candle. And this is the USD versus JPY, Japanese yen, pairing. And so they strengthened the yen this morning. And when it gets up to 160, this is typically the level that we see the Bank of Japan step in and say, not so fast. And so the big question here, because a lot of people have been looking at this reverse carry trade in Japan and trying to tie it back to how this is going to lead to XRP adoption. XRP steps in to facilitate the liquidity of these markets and others, engaging in the currency market and basically being there for the reset that we're watching all central banks and governments have to deal with right now. And so we've been waiting to see what the Bank of Japan's going to do here. This week, they decided to leave rates unchanged, and so did the Federal Reserve. But then they stepped in the early hours this morning, and they intervened in the currency. And this is being reported from Nikkei. Nikkei, which is the top stock index in Japan, they reported that the Ministry of Finance, who ultimately holds the decision and has primary authority, was monitoring the FX market, and they decided that we got a little too excessive, a little disorderly, and so they stepped in here, and that level is 160 USD versus JPY, as we showed you guys back here on the chart. They step in, and then boom, they smack it back down. Now, here's the problem in how it exacerbates the carry trade unwind. It's twofold. One, it is the currency intervention strengthening the yen, which unwinds the carry trade. People have to pay back those yen-denominated loans. And then it also sends yields higher. See, the Bank of Japan didn't have to raise rates to get the same impact. They intervened in the currency market, and then the bond market sells off this morning, sending the 10-year Japanese bond all the way up here to 2.5%. These are all levels, the highest levels that we've seen since the late 90s in the Japanese bond market, looking to break above the level we went up to in early January for the 20-year up to 3.4%, and the 40-year up to almost 4%. It wicked above 4% earlier. So it exacerbates the carry trade twofold, with the currency intervention strengthening the yen, and then the bond market sending those yields back up, those yields rising. That's also going to accelerate the carry trade unwinding as well. Because the whole idea here was we borrow in yen when it was at 0% or very cheap rates, and we're going to go, we could take it to U.S. Treasuries and earn basically a risk-free premium right there. We could take it to the stock market. We could go gamble on crypto. We could go do all sorts of fun stuff because we're going to borrow next to nothing in Japan, and we're going to go play around somewhere else. That's not possible anymore in this current environment. And so we've been watching these central banks, from the Bank of Japan, the Federal Reserve, they're all backed into a corner. They're all basically, losing, anything that we hear from them, right? We can't really put much faith behind it. Jerome Powell giving his last press conference as the Federal Reserve chairman yesterday, and they left rates unchanged, but then we see the intervention come in today. And so we've been watching it because if you watch that USD versus JPY pairing, it had been trending and trading up against that 160 level for a few weeks now. If I go back to the currency pairing, let's take a look at it. And you can find this yourselves. It's just USD versus JPY. And I'm on the daily chart. And yeah, we've been up at this level above 159 basically since beginning of March. So for over a month now, we've just been waiting to see what the Bank of Japan was going to do. They decide to leave rates unchanged with their interest rate decision, but then they come in for the currency intervention. So this carry trade is going to start to unwind even faster, and it's leading to a sell-off in the U.S. bond market as well too. See, we had the U.S. bonds over here, the 10-year shot up all the way almost to 4.5, and this is the level where President Trump and Scott Bessent have to get involved. Our 2-year shot up yesterday as well too. So we'll continue to monitor the situation. Oil cooling off slightly this morning, even though President Trump is getting briefed on continuing and basically the next round of escalation in the Middle East. So we're watching that as well too. Oil had shot up to $110 for the WTI crude oil, coming back down slightly here today, but we'll continue to see how this plays out with Bitcoin moving up slightly this morning, and along with the Dow Jones did move back up as well too, but the S&P 500 is down. So the market is adjusting today. The market's confused a little bit, to say the least. And the thing right now I think that's impacting markets is just the fear, uncertainty, and doubt about the war, about what's going to go on with the Federal Reserve. You know, Jerome Powell saying he's going to step down as chairman, but he's not leaving as governor. And so all of this fear, all of this uncertainty, all this doubt is leading to a lot of people just wanting to step away from the markets right now. We're not doing that. We're still finding ways to make money. I'm in a Bitcoin short right now that's in profit, and I'm readjusting my buy orders, getting ready to buy the dip on these assets if we get that final pullback that I'm looking for. President Trump says Fed Chair Jerome Powell wants to stay at the Fed because he can't get a job anywhere else. Nobody wants him. And so this, battle back and forth, the market doesn't like that uncertainty. And so we'll see. We have less than a month now before Kevin Warsh will be stepping in as the new Fed chair. We'll watch what Jerome Powell does. If you missed my update yesterday, I broke down the final showdown with the Federal Reserve and President Trump. Going to be very interesting. But here's why crypto's dead right now, right? The most snoozed or muted topic since launching the snooze feature on X, this is from Nikita. The number one is crypto. Before politics, before the Iran conflict, before sports, business, finance, all of it. Crypto. How could this be? Because we rinse and repeat, pump and dump, Ponzi scheme, push it down their throats is what we've been doing in the crypto space, especially for retail. Now, not over here in the XRP community as much. And, broadly across the crypto space, we can see that there are some good, actors, people that are trying to educate, speak about this crypto opportunity. But the number one muted topic being crypto tells you everything you need to know about this market. All of the new retail that we onboarded since the last election, when President Trump won and we were going to be the crypto capital of the world, they've all left. Not only have they left, they hate this space now. They went from thinking this was the get rich quick scheme to now this is the get poor quick, lose my bag quick, get pumped and dumped, get rinsed and repeated. Go follow some influencer to the depths of a bear market, right? Now, as always, we bring it back to the fundamentals and how institutions are taking advantage of this opportunity. But this shows you the mindset of the retail trader, investor, speculator who is literally muting crypto right now instead of buying this asset during the best opportunity. I think that they're going to regret it, but I also don't blame a lot of people. I blame a lot of the crypto pump and dumpers and all the crap that we've been calling out in the digital asset space. There's no reason that crypto should be the number one muted topic above politics. That's how badly we treated the new people coming into the digital asset space. And so we have to do better, which is what we try to do on our channel. If you're new here, make sure you subscribe and hit that notification bell so you can get the most important updates on digital assets without getting pumped and dumped. Okay? Speaking of pumping, March PCE inflation, Fed's preferred inflation measure, rises to 3.5%, the highest since August of 2023. Core PCE rises to 3.2%, highest since November 2023. And so in the first month of the Iran war, U.S. inflation hits a 3-year high. April's data will be interesting, and if this conflict does continue, the inflation is not going to cool down. In fact, our base case is that inflation continues higher. And we are expecting that to be a tailwind for our assets that we've invested in, like digital assets, but it's not going to bring any relief, obviously, for people on Main Street and people that are just trying to take care of their families. And ultimately, it does limit how much capital can rotate back into digital assets when folks are muting crypto, when folks don't have any extra funds to invest in crypto because of all the macro and the state of inflation in our economy right now. Now, I'll be watching. Tomorrow, we get the ISM manufacturing. The previous that we got was 52.7. And so we're going to be waiting to see what the ISM manufacturing comes in at. The expectation is 53. Anything above 50 is a sign of the U.S. economy going into expansion. And it is historically correlated with a crypto bull market as well, too. So like I said, we have some headwinds and some issues: Iran war, inflation, the central bank starting to panic like the Bank of Japan. But on the other side of this, they're just going to have to juice it once again. And it is going to be a massive tailwind, which eventually rotates back into risk on. And hopefully next time retail comes back into digital assets, they'll be coming into utility and not all the pump and dump crap that we've been warning people to stay away from, like and avoid it like it's the plague. 99% of crypto. So we'll be monitoring that tomorrow. We'll get the ISM manufacturing, and I'll have a follow-up for you. The Ripple expansion continues. Korea's first internet-only K-Bank is deploying Ripple custody wallet infrastructure, institutional-grade multi-party computation-based wallet infrastructure to securely manage digital assets across multiple blockchain networks. Already the exclusive banking partner for Upbit, which is Korea's largest crypto exchange, K-Bank is going deeper into digital asset infrastructure. Now, we already covered this, but I just want to show you guys that this is the future, right? This, as we onboard retail and we get more people back into the space, the days of everybody having their own cold storage and everybody either keeping it in an exchange or keeping it in a cold storage wallet, those days are behind us. And this is why I love the free institutional grade custody that we get from our sponsor, iTrust Capital, not only in their premium custody account, which is their closed loop system, making sure that you get no loss of your funds with no external wallets, no unnecessary risk, and just a trusted way to buy and sell crypto with confidence. But it's free institutional grade custody for their iTrust Capital IRA product for your retirement funds, as well as their treasury accounts for your business, your trust, and your nonprofit as well. There's just no reason to pay anybody AUM fees to hold your digital assets, and there's no reason why you can't get access to the same institutional security that K-Bank and Ripple's providing through their custody solution. It's not the same, but it's very similar. And I just love that we've brought this access to our community through sponsors like we have with iTrust Capital. When you use my link down below with iTrust Capital too, you'll get a $100 funding bonus. So go check them out. Or if you have any questions about iTrust, just drop them in the comments down below and we'll make sure to address that. The Ripple expansion continuing into Japan. Like I said, this is so interesting. You see the correlation here with Japan intervening, a little bit of a panic in Japan, and at the same time, we activate 44 million Rakuten Pay users, and $23 billion in loyalty points are now redeemable for XRP. This is one of the largest retail deployments of XRP as a payment method to date. Now, this is basically if Amazon and Temu had a baby, that's what Rakuten Wallet is. So you can convert points into XRP spot trade in the app and spend across 5 million merchant locations. So imagine you could use XRP on Amazon. You could, your loyalty points that you earn on Amazon, which I don't think that they have those, you'd be able to convert those to XRP. That's what this app is enabling. And at the same time, it allows you to spend your XRP across 5 million merchant locations as well, too. So you want to talk about onboarding retail with real solutions, with real utility. This is a prime example. And it just so happens to be taking place in Japan that is having a little bit of a liquidity issue as we speak. Ripple's not done. Ripple is opening its new Middle East and Africa regional headquarters in the Dubai. What is this? The Dubai. I forget what it's called. The DIFC. 6 years after our first Dubai office, the Middle East is now one of our most significant markets globally, and demand for regulated blockchain infrastructure continues to grow. First blockchain payments provider licensed by the DFSA. And RLUSD recognized as an approved crypto token in the DIFC. New headquarters creates capacity to double our regional team. And this is where I look to invest. During bear markets, during downtrends, who's still building? Who's still expanding? All last year, Ripple made over $3-4 billion worth of acquisitions last year, adding on key pillars to the infrastructure and the full financial stack that they have to offer, along with all of the licenses that they've been getting. And now they build out this new headquarters in the Middle East where they're ready to double our regional team. And there just happens to be a little issue, not to downplay it at all jokes aside, there happens to be a real issue in the Middle East right now. You want to talk about opportunity? One, they're expanding RLUSD and, kind of maintaining the petrodollar, US dollar, right, in digital form through RLUSD in the region. But you want to talk about the tokenization of oil, natural gas, some of these other great commodities that are plentiful in the region, and maybe level the playing field a little bit, right? This is such a massive opportunity, and Ripple is right there in the Middle East. They've been dominating in Dubai, and the Middle East, North Africa region is a region that they continue to expand in, and I'm very excited to hear that they're looking to double their regional team over there. Now, we are looking to maybe double up our XRP bags, right? XRP back down this morning to $1.36, and you can see I drew these trend lines to show you that we have a consolidated wedge pattern, and we're about to break out of it. And I am worried that we'll break down to the downside, but that is going to provide us an opportunity to continue adding to our bags. Probably going to look to front run. We already went down to $1.34, and this is a level that I was expecting to get front ran was $1.30. I'm also expecting $1.20 to get front ran, and then I definitely think $1 gets hit as well too. So, and what I mean is $1 will be front ran as well. So I wouldn't expect XRP to be dropping too far below $1. No matter what happens, the biggest catalyst, the aliens are here, doesn't matter. There's just so many buy orders between here and $1. So I'm positioning my orders right now. I'm in a Bitcoin short. I'll take profit from my Bitcoin short and be able to deploy that back into my XRP long, adding to my exposure there. So just letting this market that's so confused right now with so much chaos kind of sort itself out while we continue to focus on our fundamental investments, right? This Japan carry trade will continue to watch that, but we're not expecting that to be an imminent flip of the switch that leads to XRP shooting up to astronomical prices right away, right? But we do want to see the flip of the switch with Rakuten Pay going live, with more adoption in Japan, Middle East, headquarters for Ripple expanding, right? All of these little switches, like Brad Garlinghouse said, they add up to that big moment and to that big price appreciation that we're all waiting for. And just to exemplify where we're at in this cycle, the number one muted topic on X, formerly known as Twitter, is crypto. That tells you everything you need to know about retail. Go let them watch the Kardashians. Go let them watch whatever the heck they want to watch. Go be distracted by the new Netflix show and mute crypto because they got rug pulled by an influencer that they listened to. They came into the crypto space and maybe they threw money at Trump's meme coin. I don't know what they did, what coin they invested in. They got so pissed off somewhere at crypto that they literally muted it, the number one topic on X. At the same time, we're adding to our positions, and then that same retail investor will come back to us a year or two from now, and they'll ask, well, why'd you stake around in crypto? How'd you know, you made another 500% on XRP? XRP pumps up to $5-10, and the opportunity is to buy it here while it's close to $1, not to wait for retail to unmute X on, or the topic crypto on X so that they can come back in. And this will be a metric we can watch. When crypto is no longer the number one muted topic on X and maybe it trickles down to the bottom, that's when we'll know that retail is back. And that's when it might be time to de-risk and take some profit on some of those other positions. So we'll be watching that. Always do the opposite of what the masses are being, they're being led one way. We continue to step aside and say, thank you. I hope it works out. But we're going to continue doubling down on our investments in fundamental utility digital assets like XRP and others, and the opportunity for XRP to be there Ripple is a lender of last resort, and XRP Ledger is the liquidity hub for the global payment system. It's all there right in front of you, and we'll continue to invest accordingly. If you guys appreciate our updates, please help us out by liking this video, sharing it out far and wide, and we will keep you guys updated. It's been a busy week, and we're not done yet, okay? Thank you, and God bless. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.